Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, April 12th at about 1:30 p.m. Eastern. Well, Wall Street's main stock indexes are falling today as some big banks dipped after reporting dour quarterly results, and most mega-cap growth stocks and chip makers receded. J.P. Morgan Chase was down 4.8% this morning after the bank's forecast for its income from interest payments came in below analyst expectations. Wells Fargo joined, edging lower after reporting more than a 7% fall in first quarter profit as it earned less from customer interest payments. Citigroup also slipped lower as its first quarter profit fell. So banks always start off the earnings season, and this happens to be the way we're starting it out on this for the first quarter this year. Okay, so now let's go on and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Well, when I capture this chart today, it's not too beautiful. See this red number right here. The SPY was trading at $510.83. It is trading below the March 27th all-time closing high at $523.17. Now, we all know that the SPY has marched up its 20-day moving average ever since its October lows, when it came down here and traded at about $409.21. It turned on that because interest rates were heading lower, and we like lower interest rates. So the market started up on that note. The SPY moved up above the black line, the 200-day moving average, above the red line, which was inverted right here over the 20-day, then up over the green line, the 50-day. And as we all know, it marched up, then using the 20-day moving average pretty much for a trend line or for an uptrend line. It marched right up that 20-day moving average, and it's been doing so actually we're into the 6th month, and this is beautiful, guys. I've been in the market a long time. You don't always see an uptrend that is this picture perfect. Now, but all good things, as they say, must come to an end, and we know that markets of industrialized nations move in cycles. They don't move straight up forever. And we certainly hope they don't move straight down. But in this case, we are seeing a pullback here. It's expected. I mean, I'm amazed it didn't happen sooner. We do want it to remain orderly. Now, on Tuesday, we see how it fell in the past week below the 20-day moving average. And we know that Tuesday, Wednesday, and Thursday of the past week, it touched intraday lows of about 512. It was at 512 earlier today, and now it's slipped down to 500, as I said, $510.83. That's not too bad. It is sitting atop its 50-day moving average, which is coming in here at $509 at the moment and 74 cents. And last week, for the first time, the SPY fell below its 20-day moving average. Again, that was acting as a nice trend line for it, but at some point, as I said, a pullback was going to happen, and we're seeing it now. It just depends, of course, on what the pullback ends up looking like. Now, we watch the 50-day moving average always as a sort of an intermediate term trend line. And know, too, that institutional traders watch this line for information. So to remain bullish, we do want, don't know if it's going to happen or not, we do want the SPY to stay above its 50-day moving average. And we can also go back to basics. We can say the definition of an uptrend is price making higher lows and higher highs. We don't always get our way on that, but that is the definition. So what you see right here is a little weakening of our major ETF, our major index. As we go into first quarter earnings season, which is what we're doing with those with the banks announcing, We'll keep an eye on the SPY, and we want to keep an eye on the 50-day moving average. That's an important point here. So keep an eye on that. We could get a price dip here. We are, and it's logical. So please stay patient and trade wisely. Our next chart today is a daily chart of the Invesco QQ, symbol QQQ. This, of course, is the ETF that closely follows the NASDAQ 100, which is an index of the top 100 non-financial stocks in the NASDAQ stock market. Now, this is the ETF where the momentum stocks reign. We're talking NVIDIA, Meta, Microsoft, that whole group. Now, the QQQ is trading, as I captured this chart, at $437.71. And that's it's just below its all-time closing high, and that was on March 22nd. Let's see where March 22nd was. It was back here. It was the closing high. Oh, goodness. I've been looking. Oh, I know. Well, I thought that was it right there. The closing high, they had a closing high on the NASDAQ a couple of days ago, but it wasn't the QQQ. The closing high was in at, maybe it was here. Anyway, it was at March 22nd at $466.38. Now, at the moment, you can see, since then, the Qs have fallen below their 20-day moving average, and they're caught now between the 20-day moving average and the 50-day moving average. So we're caught now here between these two lines. Again, it's like a vise, or think of it as a pressure cooker. The 20-day on top of price today and price falling, and the 50-day at 437 below price. So it just remains to be seen here in the coming week, this vise or this clamp that we've got the Qs in with these moving averages. Usually when you see something like this, price will break one way or the other. Would it be great if it goes back over the 20-day and heads higher? Absolutely. And to a degree here, please know that these big tech stocks, when they announce earnings, they can push the market around, that's for sure. Now, just like the just like the SPY had its low in October, so did the QQQ. And we remember that the October lows here were at $342. The Qs did not go below their 200-day moving average like the SPY did. The Qs stayed above that line. And then started moving higher, and similarly to the SPY, after it got going, it used the 20-day moving average as a trend line. But keep in mind that tech stocks, big momentum stocks, are more volatile than stocks in the S&P 500. So the Qs will go while the SPY just danced very sweetly up the 20-day. The Qs are like, no, they're rumbling. They're coming down below it, going back above, but still staying in a really nice trend line all the way up to where it got worn out, tired, earnings season's coming in, a lot of geopolitical stuff going on, and so forth. So we're in a clamp, in a vise here. We're going into earnings season, and it started now, and it'll be for the next heavy duty for the next 3 weeks anyway. So please know again that big cap tech earnings can push the market around. Again, we were due for a pullback. Just fingers crossed that it takes place in an orderly fashion. And again, please keep your eye on your protective stops. Our final chart today is a daily chart of the Global X Uranium ETF, symbol URA. Now, this is not a day today in the market that I would have chosen to buy something in particular. So I looked hard and long to find something that I thought was reasonable to show to you all. A lot of days like this really, and maybe into next week, standing on the sidelines may be the best place to be. cash is a position, but I will bring this to your attention. I've been actually watching it for a while. The Global X Uranium ETF, symbol URA. It has 48 top holdings, including Cameco, NextGen Energy, Palladian Energy, and Mitsubishi are some of the top ones. Now, if we look at this chart here, we can see that in January, the URA was kind of trading in an uptrend here, then fell down through its 20-day and 50-day moving averages. It fell down to this low here at 28, down to 26.61 right here. Then it rallied up in this wild rally higher, and it rallied up to an intraday high on January 16th at actually exactly $32. Then it fell down to its 20-day moving average, which is coming at the time bouncing off its 50-day moving average. And it came down here to $28.90. Then it flew up to a relative new high. Relative means the highs on either side of it are lower. So it moved up to a relative new high on February 1st to $32.60. So that was quite a move. Then it did a dumpster dive. It dove down to down to near the prior lows before. So this was 26.61. This was 26.48. So it came down and retested these prior lows from back here in January. Then from there, it started building another little base here, then rallied this month up to 31.50 up here, then fell back down, held support here. That's a good thing. So it looks like we're getting a support level in here, so right around 27.28. Looks like that's a support level, and actually we could take it back a little ways, but this will work. So it looks like it's holding here now. Uranium, of course, is in the energy industry, which I do like right now. It is not a mainstream tech arena, which I actually like right now. I don't know if it's going to be a wise choice now because of what's going on in the market, but of all the things I looked at, this looked like a possibility. So right now, again, when I captured this chart, it was trading at $30.53. The 20-day moving average has moved up to cross over the 50-day, and the 200-day is trading down here at $26.72. That's where the 200-day is coming in. So right now, I am going to keep an eye on this in the coming week. And if in the coming week the URA can stay above its 20 and 50-day moving averages, and the 50 days coming in here at $29, so just call it 29 if you want. If it can stay above 29, I will add a small position to my trading portfolio, with small being the operative word here, with a stop down here at 27.90. I'm putting a stop at 27.90. If and when the URA can rise above this prior high up here, if it can rise above, I'm going to say 36.70, I will add to my position, and my stop will be by then, of course, a trailing stop. So you may want to keep an eye on the URA in the coming week. Now, if you'd like to become a more profitable trader, this is a great time to check out my online training programs. From our ever popular 7 steps to successful trading, down into how to swing trade successfully, or actually a really good thing to learn right now. Trade the trend to profits, how to read charts, great for novices, 3 winning setups, great for short-term traders, and how to bottom fish like a pro, certainly one of my favorites. You will learn how to make more money trading. You'll learn how quickly and easily. These programs are timeless, and to make them more accessible to everyone, we've just lowered the prices on every single one. So be sure to check them out by going to the link on the screen up here, or better yet, just simply click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is the Market Now.